Our guest says this merger in which National Bank wants to buy Canadian Western is bad news for small and medium-sized businesses in Canada when it comes to getting financing. We are joined now by Guy Heywood, a principal at Corporate Banking Advisory. Guy, thanks very much indeed for coming on the show. You say that Canada offers particularly poor access to bank financing for smaller and medium companies. Just enlarge on that, if you would.
Well, I'm not just saying it. I'm just reading the statistics from the OECD, the Organization of Cooperation and Development based in Paris, that provides a scoreboard basically for financing that's available to small and medium-sized enterprises in all the OECD member countries. And Canada is an amazing outlier to the negative by this scoreboard and has been for many years. So this new merger is really kind of piling on to a problem that is already quite large. And the connection between this access to capital and Canada's failing productivity, I think, has to be made more clear.
That is interesting. I have heard that in the United States, well, they have more banks and that a local company that has growth plans will get support from a local lender, but that just doesn't happen in Canada.
Well, we have a different economy. It's just relationship-based, but the relationships work for the banks because they are large, sophisticated, and very good organizations. And the small business does not have the time to spend shopping for specialized equity and debt providers. So that relationship is so important. The banks occupy the space of where a commercial lender should be, but doesn't do the job.
And I think I've read some of your work. You write occasionally for Business in Vancouver that Canadian banks tend to look for personal guarantees more than U.S. banks.
And that's been a very interesting development. We have some fintechs that do use AI to try and matchmake lenders and borrowers, and they work across the border. And they tell me that it is much more common that in a small business loan, a personal guarantee is required in Canada, which in many cases, that bank already has that entrepreneur's personal assets. So it is just the relationship is just too close, and the bank's interests are in deposits, not in making loans.
You say that National Bank did a reorganization that practically acknowledges this. Can you, or not related to this deal, can you enlarge on that?
Well, National Bank has been really wants to be a member of the Big Five, and really the class of the Big Five is RBC, which focuses on wealth management, and the banks focus on the wealth that's already created. And it's hard to do that. It's like sucking and blowing at the same time. It's hard to provide the services for the companies that are still trying to create that wealth. So when you merge a private wealth group in your commercial banking group, it's pretty clear that you're focusing on the entrepreneurs that have already made it, not the ones that are still trying to find the financing to go forward.
It's interesting. You think this is holding the country back, this lack of financing support for smaller companies?
Well, yes, and I think we have a lot. We're just faced with a lack of data. The Globe and Mail report on business is really the Globe and Mail report on banks. We don't have good insight into the nuts and bolts of that relationship between the thousands of Canadian companies, their lived experience trying to find debt to modernize, to acquire, to grow. There's really only two sources for a small and medium-sized enterprise, and that's owner equity and the money the bank will give them. They don't have the time and capacity to do the kind of shopping you do when you are a corporate borrower.
What about all these government programs, so the Business Development Bank of Canada and the Export Development Corporation and all that?
Oh, my goodness. Well, the Business Development Bank originally was meant to support chartered banks, and you had to have a letter of rejection from two chartered banks before you could get a loan from BDC. That's long in the past, but it's still really the case that those programs work through the banks. They don't advocate for business the way the Small Business Administration does in the U.S. The SBA in the U.S. will organize an RFP making banks compete for a business that they decided to support with a loan guarantee. The dynamic is the opposite up here, where we protect our banks, not our businesses.